I would say that Hong Kong, China related earnings have actually been quite okay, but we're still quite early on. I mean, obviously, we haven't seen the third quarter numbers yet, the way that a lot of US and European companies have already started to report. We are seeing that, generally speaking, financials are doing quite well, largely because the interest rate expectation is now shifting up, as well as the credit cycle was not as bad as what people may have anticipated maybe 6 or 12 months ago. So you have already seen a positive reaction in terms of banks with developed market exposures for sure. In terms of Hong Kong, China, not everybody reports on a quarterly basis, but generally speaking, the economy is doing quite well. The thing that people have to be a bit more concerned about into the third quarter for some sectors is really more on margins and cost pressures coming from supply chain disruptions and other types of inflationary pressures. The top line is usually quite okay during this part of the cycle, so we're not too worried about that. But there are a number of sectors that will see meaningful miss in terms of margins, and those are probably the ones that one needs to be a bit more worried about. But the policymakers have been very proactive in the last week as well in terms of containing commodity prices and coal prices, energy prices, as you've mentioned earlier on the show. So I think that looking forward into first quarter of 2022 should gradually start to alleviate, at least from a PPI pressure perspective.
Okay, what about Chinese tech?
It really depends on which part of the tech space you're talking about. If you're talking about internet space, for example, there is a combination of cyclical and structural factors that play here. So I would say the structural factors, it really depends on what company you're talking about. Different companies have completely different exposures. Some are going to be negatively impacted, but others might actually have no impact or maybe even benefit from the anti-monopoly policies that have come out. Furthermore, I would say from a cyclical perspective, probably the ad space and discretionary spending space is going to gradually start to see some downward pressure because the economy is slowing down and a number of advertising customers have been under pressure or under regulation. But probably for the third quarter, that's not so obvious yet. So probably going into the fourth quarter, it's important to see what kind of guidance they come out with. And in terms of hardware tech, then generally speaking, I would say it really varies by company as well. Some parts are still, the demand and volumes are still quite okay. But going into 2022, probably you do see some kind of peaking of certain subsectors as PC and other parts of demand are starting to slow down post-COVID, and mobile phone shipments continue to slow as well.
Is investor confidence returning into Chinese assets? I remember back in August, the broader sense was through a dipstick survey that November, December would be the time around which people would start getting back in. Are you getting that sense?
Well, I think for Chinese equity specifically, unlike the rest of the world, it's really right now more about valuation and risk premium rather than specific earnings for specific companies. So as you know, the Chinese economy has been less disrupted by COVID and a lot of these different types of drivers. And a lot of the pressures that we've seen have been so-called self-inflicted policy type of adjustments, counter-cyclical measures during a period when the economy is actually quite strong to make the structural adjustments that are necessary. So it really depends on whether people feel like the regulations are starting to come to a later stage or whether the risks are actually manageable. If that is the case, then you actually see a potential upside in terms of valuation normalization rather than significant upward earnings revisions. But if you look past, throughout the past, 5 to 10 years, certainly there have been periods when the economy is under significant pressure, but usually it's not because of self-inflicted regulatory changes. It's probably because of some external challenges, whether it's a trade war or whether it's because of, COVID, et cetera. This time around is actually the policymakers' own decisions with relation to the property sector, to supply side reform and commodity prices with respect to internet regulation, et cetera. So if it's self-inflicted and self-managed, I would say that the likelihood of it blowing up into a systemic crisis is much, much lower. And so we see the opportunity more in valuation normalization and risk premium normalization.